Welcome to Driving Alpha, where we feature our friends, the outperforming investors who demonstrate their path to driving alpha or outsized investment returns. We're Alpha Partners, where we partner with 1,000 early-stage venture firms as their opportunity capital to invest in their best companies. Driving Alpha is supported by Affinity, provider of the CRM for the private capital relationship economy. Affinity knows who has the best relationship with the right startup. Affinity knows. Learn more at affinity.co/driving alpha.
Hi, this is Steve Brotman, the founding and managing partner of Alpha Partners, and we're bringing to you today Driving Alpha, and joining us is Aziz Gilani, the general partner at Mercury Fund, the $160 million venture powerhouse backing software innovators like RepeatMD, which revolutionizes healthcare tech and fintech, and Brasica. This Texas-born dealmaker has engineered exits like Black Lotus and Modus with his partners, while propelling Mercury's portfolio to over $9 billion in enterprise value. A Kaufman Fellow who literally wrote the playbook on seed accelerators, Aziz now shapes national innovation policy through his Commerce Department appointment, which he recently left the end of last year. When he's not teaching future founders at Rice University or advising Black Founders Matter Fund, you'll find him hunting the next unicorn in cloud tech and AI. With recent wins like cybersecurity standout Blumira and VR fleet maestro Arbor XR and others, strap it in. We're cracking open the playbook of a VC who turned middle America into a $1 billion innovation corridor. So welcome, Aziz.
Thank you, Steve. And let me just say, we've known each other for many years, and I admire what you guys do at Alpha Partners every day.
Thank you for saying so. We're super excited to be a partner of yours. So the first question I like to ask folks is, how the hell did you end up being a VC? How did that happen? Was it complete accident, or was it something purposeful, or what happened?
I kind of grew up in the enterprise software industry. I had that proverbial origin story where in high school, I would literally ride my bicycle to a software startup in which we were working with NASA contracts down in Houston, Texas. I got my first job at a software company at Lotus Development Corp, which if you're old enough to remember, that's the company that's responsible for spreadsheets and email. I then circulated around to a few places. As I like to joke, I failed at every point in the enterprise software stack, whether it was, at Lotus, at Ernst & Young, where we were doing lots of complex packaged software implementations, whether it was at ABB, where I was in charge of software procurement for our division, or at Infosys, where, this was one of the, your classic Indian offshore development center type operation, which we were trying to give custom functionality to our customers and clients. And so I kind of got a broad view of how that enterprise software landscape works, both from the development and the sales and the implementation side. And so when I applied to business school, I actually got a phone call I didn't expect to get. So this is a shout out to Matt McCall, who at the time was running Portage Ventures, but more importantly, was an advisor to the Kellogg School of Management over at Northwestern University. And so on the admission phone call that he gave me, he said, "Hey, Aziz, it seems like you've got a background that lends itself to venture capital. Have you ever thought about working in venture capital? If you haven't, let me tell you more about my firm." And so that was my introduction to the industry. And I've been a VC ever since.
Wow. Matt and I worked together at Pritzker Group for many years, and I can kind of see the connection there. I didn't know that. That's amazing. And so born and raised in Texas?
Wasn't born in Texas. I was actually born in Midland, but Houston is definitely home for me. It's the place I live the longest. It's the place where I have my most roots, and it's the place where my family's at.
Right. So logically, Houston, Texas, venture capital, this is where it's going to be. It's like, how that is just like you just grow where you plant it.
Yeah. I think you kind of play to the strengths of the market that you're in. And so I remember at one point, Microsoft actually put out a number saying they had the largest concentration of enterprise software licenses in Houston, Texas than any other place. Look, if you look at it from a vertical point of view, Houston's kind of the home to the energy industry. It's also the home to a number of Fortune 500 companies. I think it's the second largest concentration after New York. But what that means is that if you work in enterprise software, man, you will not find more customers to try out your dog food than Houston, Texas.
It reminds me a lot about, I started my career in New York, and had a similar thesis about New York with the concentration of basically folks that work at the application layer. And
Yeah.
it definitely played out. It sounds like the immigrant community in New York was a big factor, but
Yeah.
also the other two elements were capital availability and sort of
Oh yeah.
entrepreneurial risk taking, which are really the two elements that you need to have a vibrant entrepreneurial community. Because if you don't have the risk takers, the angel investment community, how's that developed over the last, couple decades?
If you look at Texas as a whole, we've seen some radical progress kind of across the entire ecosystem here, especially in Austin, where that angel community and that seed stage investment community has really kind of blossomed into something special. In Houston, we continue to see progress, especially with Rice University at the forefront, setting up something called the ION, which has become like the center of gravity for entrepreneurial activity down here in Houston. But like all places in America, I would say Texas has not been immune to kind of the blossoming of startup culture and innovation ecosystems. I think America as a whole has kind of recognized that growth and our standard of living are closely tied to the development of this industry. We've made huge steps, which is why our industry has grown to the size that it has.
It's amazing. So as a VC, it sounds like you started, that was your first career. This is your first, not your first career, but as a VC, what sort of things do you look for in your entrepreneurs that you back?
I would say that every startup and every entrepreneur is a little bit different, but the consistent thing is that there's always a spike in one direction. When I say spike, I mean they're the best in the world at something, whether it's their domain expertise, whether it's their tenacity. Mike Maples Jr., he always talks about how he's talking about thunder lizards and kind of like, the entrepreneurial ethos where they'll walk through a wall if that's what their customer needs them to do. So that customer focus can be it. The domain expertise, it could be like the ability to sell ice to Eskimos. But I'm always looking for that spike, that unfair advantage to win. And that's just because starting a company is just a really, really hard thing to do. If you follow the math, it shouldn't succeed. And so you need that special something for it to win. And so I'm always looking to see if I can find that special something, that special spike in an entrepreneur to make me believe in their vision and their ability to go through the odds and actually win.
Now, we might embarrass someone here, but do you want to pull out any of your entrepreneurs and share like a vignette of like their special spike that you saw?
You started today's conversation talking about Repeat MD. Phil Sitter, I mean, talk about like an entrepreneur like no other. When I met him, it's like, he loved kind of highlighting the fact that he's a third generation entrepreneur. His father is a restaurateur. I mean, talk about brutal businesses in which like the failure rates are incredibly high, and having him kind of grow up in that industry and growing that tenacity in order to kind of build and build and build. If you look at the Repeat MD business itself, it had a hard pivot against its initial business model, but he was singularly focused on trying to find that vein of customers that would actually sustain what he's doing. So lots of tenacity, unwilling to take no for an answer, and then the ability to kind of lean into what his customers actually wanted from his product. All of that was created huge buy sign for me in a way in which I wanted to see that company succeed.
Interesting. I mean, for every entrepreneur out there, there's also the element of the opportunity set. What sort of things are you drawn to lately that get you excited? And how important is the concept versus the entrepreneur?
Yeah. So I would say that if there's something that I have to have, it's you have to be going after a massive market with a massive TAM that is growing. And so each element of that sentence and in each of those conditions is super important to me. Right. So first of all, the market needs to be really big, meaning that for our fund to succeed, we need to get to that massive exit point in which we're talking about hundreds of millions of dollars, if not more. If I want to believe that you can exit to that point, then I've got to believe that you've got this massive market. Then I need to believe that the piece of that market that you're going after first, the piece of that market that is addressable, that I think that you've got that unfair advantage to win at, is itself big enough. And so so I start with this giant number, and then I get to a slightly less giant number, but still really, really big. And then I've got to convince myself that your team, maybe it's your approach to market, maybe it's your channel, maybe it's the product that you're working on, it gives you an unfair advantage to win. And so I've got to believe that once we figured out what the true TAM is, that I've got to believe that you've got something kind of baked into the DNA of your business that gives you the right to win at it. And once you've got those three ducks in a row, then I'll actually get into the details of what you're doing and how you're doing it. But I've got to answer those three questions first.
What do you wish you knew back when you started your career as a VC that you know now?
I could break that down into a few categories. The first thing that's kind of startling to me is how big our industry got. So I wasn't a real VC until probably the year 2008, 2009. And let me tell you something, our industry was a lot smaller back then. Like the first thing that people would say when I'd walk in to their offices in our industry was they're like, "Hey, Aziz, like, what firm are you with?" And I would say the name of my firm. And then they would say, "Oh, yeah." And then they would rattle off the names of all the partners at my firm. And that was because our industry was small enough in 2008 that everyone knew everyone. We were just a few hundred people. That was the entire venture capital industry. Now, our industry can be measured in the thousands, which is kind of like, it doesn't sound like a huge jump, but I think the last time I tried to run the numbers on this, we're 14 times larger than we were when I started in this industry. That's a massive expansion. When I started in venture capital, it was just like, the average size of a fund was 4 people. That has drastically changed. We now have people who talk about career paths in venture capital, which kind of blows my mind. None of this stuff was true when I started in this industry. So the first bucket I would just say is just industry wide. I didn't realize that we were going to be like living through the golden age expansion of venture capital as an industry. So that's number one. Number two is I kind of academically understood what it meant to see a technology shift create winners, but nothing prepared me for the explosions of industry sizes that I saw over the course of my career. I mean, you have to remember, when I started in 2008, the sharing economy was not a thing. Okay. We now have over a dozen public companies that are built on the premise of the sharing economy. Smartphones had just been introduced, like maybe 18 months before I joined. The ubiquity of mobile computing in your hand completely changed everything, to the point where that alone is $500 billion of market cap right now. When I started in venture capital, there was an active debate on on-prem versus cloud computing. There were people, very serious, very respectable people, who would walk into my office and pitch me on the idea that once this cloud trend blows over, and people get their senses and go back to on-prem, this is what's going to win. And that itself is like multi-trillion dollars worth of market cap right there. And so this is one of those things where it's like, I was mentally prepared from an academic point of view to kind of understand how something can go from zero to huge, but watching time and time and time again, how fast things can get so big. I mean, it's humbling to kind of see what happens in this industry. And so, man, I wish I understood that. And then the last thing I'll just say is, I talked about how the industry got big, and then I talked about how our portfolio companies kind of defined the economy kind of moving forward. The last thing I'll just say is, wow, this is still, even after all of that, this is still just a people business. We kind of talked about how my career got started by Matt McCall. You know Matt, I know Matt. We can probably get him on the cell phone right now and get him to join this thing. This is still an industry in which it's still human to human, person to person. Whenever I have a question about something, I just text the person who runs it, and they usually answer back within just a few minutes. And man, it's I just love the fact that our industry still operates that way. And that's something that if you would have told me the first two things, I wouldn't believe the third, but all three somehow still seem to be true. And that's pretty awesome.
And so what's the implication from those three things?
I mean, I think that the implication here is that we operate within a hyper-connected industry in which reputation matters a lot. This is an industry where, based off of merit, the best idea wins. And when it wins massively with no cap on upside. And so everything is about finding the right smart bet and then bringing as many people along with you as you can, so that we can all win together. That's what makes this industry special. We're not like a lone wolf type of business here. This isn't where you go hide yourself in a hole, you run some analysis on a spreadsheet, and then you kind of quietly make your bet, and then you pray and hope it works. That's not how this works. The implication here is that we are constantly interacting with each other. We're constantly iterating ideas off of each other. When we think we found the answer, we tell everyone else, and then we all try to win together to kind of create that new market category that we think can lift all boats. And so that's the way we have to operate. And so that's why if you look at every VC, we're all super extroverts. We all have like these public personas. We're all on every podcast that will ever have us. We all love to hear our own voices. And that's because that's the way it's built into our DNA. That's just kind of how we operate.
So turning to something more dour, regulations. How do you see things moving forward in that respect? Because that sort of tamps down that enthusiasm and that vigor, right?
I got to say, one of the weird things kind of about our business is that given the huge impacts we have on the US economy, given what we do for competitiveness and what for innovation, you think that we would be at the forefront of what people think about when they're writing regulations, when they're writing laws. But even though our industry has grown by so much, we still are just a tiny speck. We're just a few thousand folks working at a few hundred firms. And as a result, when policymakers, when lawmakers write laws with the best of intentions, we usually get accidentally kind of caught up in stuff. And so as a result, regulations written for public companies end up impacting our tiny little startups. Regulations written for massive private equity firms end up kind of picking up venture capital firms along for the ride because we are a tiny subcomponent to what they do. When folks, see bad actors at large tech companies, they write regulations, and those regulations inevitably impact our tiny little startups. And so I would say that part of what we as an industry have to deal with is that bystander shrapnel of, because we're around the hoop, because we are in these industries that we're trying to disrupt, we got kind of caught up in the same dragnets as everybody else. And so this is always a challenge that we're trying to find a way to work around.
Anything, not to be pointed, but are you, there's been a lot of uncertainty with the new change in regime and the administration. Are you optimistic or pessimistic, or do you think things are moving in the right direction? Just curious in terms of what's your hot take?
I'm a venture capitalist. And so because I'm a venture capitalist, that means that I am an unrepentant optimist. I feel like it's baked into our DNA. We have to look at the situation in front of us and look for the opportunities. I mean, look, for a living, we're trying to figure out how to disrupt multi-billion-dollar legacy industries. And so when you show me a change in administration, I can't help myself. I have to look for the opportunities there. And so the opportunities I look at right now are, I think that we've got leadership at the SEC. I just participated in their small business forum last week. And I think that there's a real opportunity there to kind of solve some of the regulatory hurdles what we've been running into for the last few years. I also believe that we've got some real chances here to do some interesting things over with the FTC. It's not a secret that the FTC has been a bit of a barrier in terms of M&A activity in the United States. And so I see a real opportunity there to get some help from them, or at least some clarification from them so that we can sell our companies and get, some liquidity back into our LPs' pockets. I think that there's a real chance to lower the hurdle rates for what it takes to IPO business under this current administration. And so I'm super excited about that. And then the last, I'm not necessarily like a Web3 investor myself, but I've got Web3 investors on my team. And man, I think we have a once in a generation chance right now in order to get some real regulatory clarity in terms of what the rules of the road are in that nascent industry, so that we're not running around trying to deal with, a regulation by enforcement. I just want to know what the rules are. And I think this administration can actually give us what those rules are. And so in all of those categories, I'm very optimistic about what we can see over the next few years.
It seems like ever since I got into the venture capital industry, carried interest has been like a perennial, sort of Damocles over the entire industry. Fortunately, Obama lowered cap gains to 0% for startups that are under 50 million in assets or revenue, which was a huge boon to the industry, created lots and lots of jobs. You work with the NBCA. What's your perspective on that debate?
Yeah, I mean, look, if there's a recurring theme in today's conversation, it's that venture capital as an asset class greatly expanded over the last 15, 20 years. And that, I would argue, is directly correlated with the fact that we level the playing field in terms of investing in startups, investing in venture capital funds versus the other things that people can invest in. Folks, who invest in real estate have had great advantages in terms of being able to take advantage of depreciation, being able to take advantage of a number of tax provisions that give them all kinds of benefits. And so what I loved about the Jobs Act and what I loved about what we started doing in 2008 was we lowered the thresholds for what it took to invest in a startup and a venture capital fund. And then what we did is we leveled the playing fields in terms of the tax treatment of investing in startups versus investing in alternative things like real estate or other aspects of the economy. And so that's why, given that new level playing field, you saw our industry kind of grow and frankly, superpower the American economy over the last 20 years. And that's why, for example, America is the market leader when it comes to AI. That's why America is the market leader when it came to cloud adoption. That's the reason why there are two standards for mobile computing, and they're both American. And so you kind of have to look at what we did there and the decisions we made to kind of encourage this type of behavior and see how that translated directly into America accomplishing what it needed. Now, the challenge we always run into is that sometimes we become the victim of our own success. We look at these things that we did in order to kind of make America the global leader at these things. And now we kind of take that for granted. We kind of tell ourselves, wow, America's leading in all these categories. I guess we can unplug this stuff. And it's kind of like, wow, wow, wow. The reason why folks invest in startups is because they know what the rules are for investing in startups. If we were to pull the cord on them and basically say, hey, we're now going to put you into a double taxation situation, which is what some of the provisions I've said read, in which you have to pay both capital gains taxes and income taxes. Holy moly. Now, instead of trying to level versus other investment classes or even normalize versus, standard W-2 income, which doesn't take into account all the risks that we take to kind of get our companies off the ground. If you start double taxing us, holy moly, you're now talking about a world in which you are actually disadvantaging us and turning our industry off at exactly the moment that I'd argue that we want to be at the forefront versus our competitive rivals.
Right. And with China and Russia at 10% cap gains rates, which is far lower than us, we're already above that. We don't necessarily want to turn that tap off. Like frankly, what the European Union's done. The last 20 years, it's been flat.
I was reading a chart a few months ago, kind of comparing, GDP and standard of living, US versus Europe. We were pretty darn close to parity back in the year 2000. And I'm working off hazy memories here, I want to say the United States is now like over 40% ahead of the European Union by those measures. This is directly attributable to the fact that, hey, over the last 25 years, there have been 3 major innovations that have happened in the global economy, and all 3 are led by the United States. And that's directly attributable to the fact that we are the market leader when it comes to this stuff. And this comes out of the activity that we're doing in our industry and seeing startups thrive.
So smart policies matter.
Yes, we have to encourage, like the behaviors that we create are directly attributable to the policies that we set. When bipartisan majorities got together in 2008 and said, we need innovation to be a priority, man, we were able to make that happen. And so I'm very, very thankful that everyone around the table got together to say, this is a smart idea.
Yes, with some of the populism out there, though, that consensus is getting a little hazier, right?
Again, I am an unrepentant optimist. And so I've got to believe that if we have smart people standing in a room working hard on trying to get the best outcomes possible, then good outcomes can result. And so I want to empower the innovators out there. I want to empower the inventors out there. I want to empower those pieces of the economy to see them be as successful as possible.
So let's talk about the future a little bit. What are you most excited about in terms of sectors? As a percentage of GDP over the course of our careers, technology's grown from 2% of GDP to 20% of GDP, and it's 30% plus of the stock market. What do you see going forward? Is that going to continue to grow as a proportion, and what sectors in particular? What do you think?
Yeah. So, the first thing is, when we kind of define things as being technology, it's like, you've got the tip of the spear. These are the companies that are dedicated to horizontally coming up with new technologies that kind of impact the economy. But then after it becomes ubiquitous, it just becomes the economy, right? I remember when my first job, I was helping corporations set up email networks. And email back in the 1990s was seen as high technology. Okay, you can't walk into a company in the year 2025 and not have email. Email is just kind of everywhere, right? And so, it's like there's a little bit of arbitrariness between what we define as technology versus what we define as being like industrial or the rest of the economy. So I just kind of want to get that out of the way. With that said, one of the benefits of the American economy is that we welcome change and we welcome disruption to constantly improve our activities, our efficiency, our productivity. And so as long as our economy is built that way, you will see technology companies first horizontally and then vertically. So horizontally meaning across all industries, and then vertically within industries, continue to move the ball forward and continue to constantly improve and disrupt and take over every aspect of the economy, because that's just the way that we work. And so, the horizontal technologies I'm the most interested in. Look, I'm a venture capitalist, so I'm going to talk about AI. The radical improvements that you see, especially in service-focused companies, in service-based businesses, to automate, to productize, to kind of improve the capability set is just so radical. You're going to see that touch everything. So I'm super excited about that. On the frontier, I'm super excited about what we're seeing on the quantum front. We see new headlines almost every day in terms of folks working on advanced chipsets, being able to kind of move to novel materials. And so I'm super excited about what we're seeing there on the quantum side of the equation. I'm also super excited about what we're seeing in terms of customer behaviors. We used to live in a world in which, and it's kind of crazy because this is the world I grew up in which you had folks basically buying the exact same products from the exact same stores, watching the exact same content on the same 3 networks all the time. Okay. We were a very monolithical society with very monolithical consumer behavior. And so we now live in an economy in which everything can be super dynamic. Everything can be customized. Everything can be built around the individual needs of each individual consumer. That's something that we've been marching towards over the last few decades, but you're now seeing that play out in real time. And so I just think that there's a whole set of behavior changes that gets attached to that just unleash a whole new wave of how this economy can operate. And so I'm just excited about all the ramifications of that.
You have any examples in the portfolio that you could call out for some of those
Man,
items, or just to say like services or quantum or customer, or those the sort of future stuff that you're looking at?
yeah, I mean, it's a combination of them, right? I mean, look, if you are a technology company in the year 2025 and you have not rethought out your entire product roadmap in order to take into account how AI is changing the game, then I think that you're kind of asleep at the wheel right now. I've got a Google sheet in which I reached out to all of our CTOs and I said, hey, the way you write software has changed. You're using probably a new IDE. You're probably thinking about, greenfield code one way, brownfield capabilities a different way. You're probably writing your specs a different way. Let's all just share all the new tools that we're using across each of these individual slices of the product development cycle. And I really enjoy that exercise because I learned about all these new tools that I had never heard of. But that's just because everything's changing every few weeks right now in terms of how you build things. So how you build things has changed. Then how you sell things has changed, because now you can automate your outreach to customers. Now you can automate how you even support your customers. Now you can automate how you pick which customers you engage with the most. So how you sell has changed. And then what you're building and selling has changed. And that's just because all of these brand new tools give you all these brand new capabilities. And so now we're talking about not just giving people the standard Web 2.0 web portal that allows you to kind of track a complex workflow. Now we're living in the agentic world in which, using RAG models, you can actually do all the things. And so now as a customer, you're not looking for software to organize what you're doing. You're just looking for software to just do. And so that just opens up a whole new world of capability sets. And so, man, when you're asking like how I think about these things, current portfolio, it's like, how are you using AI to both improve how you work and improve your product set? For what I'm investing in into the future, I'm looking at companies that take advantage of the new AI capabilities, specifically to productized industries that we previously thought were untouchable, and to unseat the incumbents that still haven't embraced all the capability sets that you see with AI. And then even a little bit further down the frontier, I'm super curious on what we can do with some of the quantum stuff, with some of the robotic stuff, and some of the other new capabilities that are just over the horizon. Those are all super exciting to me right now.
Have you touched any of the quantum or robotic stuff yet, or is that?
Man, I'm literally taking pitches on quantum and robotics every day right now. So I haven't made a bet on the quantum side. I haven't made a bet on the robotic side. The closest that we've done to the robotic side is we've done some standard governance type stuff. We've done some standard like training type stuff. We looked at it from that side, but I haven't actually invested in a robot company, if that makes sense.
Yeah.
I haven't invested in a quantum semiconductor company. Frankly, I think that if I'm looking at quantum, the first move I'll make will probably be on the cybersecurity side of the equation, just because of the implications that we have with some of the cybersecurity standards that we're working on right now. I'm taking pitches on those like almost every other day. In fact, this is a plug. If you're at RSA, or if you're at DEF CON, or if you're at Black Hat this year, I'll be at all three. And so if you've got a cybersecurity startup that helps me kind of deal with that world, I'd love to kind of hear what your ideas are.
Very cool. And what is the best? That's a really good segue. What's the best way for an entrepreneur to get in touch with you?
Like all venture capitalists, we do everything we can to be as accessible as humanly possible. Right. So what that means is we have websites with like forms to fill out to kind of reach out there. I'm on LinkedIn. I'm on social media. You can basically find me on every platform known to man with the handle Texas DC. My email address is on my website. But long story short, man, if a venture capitalist makes it hard to get a hold of them, then they're not really doing their job.
Yeah. I have 3 people reading my emails every day. So just to keep track of it all. And for
You don't want to, I mean, the byproduct of this is you don't want to know what my unread count is on my email inbox.
no, that's why I have 3 people helping me out. On the LP side, where are you in that phase? Like in terms of what fund are you on? When are you going to raise your next fund? Just for those LPs that might be listening.
Yeah, sure. So Mercury Fund, we're currently deploying out of our 5th fund right now. We're in full deployment mode right now. And to be clear, something that we've been pretty public about is that, we're pretty focused on generating liquidity for our limited partners. And so, we've been very public about the fact that we have playbooks in which we try to focus our companies in terms of exit readiness and preparedness. And so we spend a lot of time trying to be thoughtful about when is the right time for our companies to exit. And that's something I spend a lot of my time doing. With that said, not fundraising now, but if I just follow like the standard trend line of when we raise funds, probably next year is when we go out to raise our next fund.
Great. And you mostly focus, what is there a geographic focus?
I would say that Mercury, I live in Houston, Texas. We have another office in Austin, Texas. We have another office in Michigan with my partner, Adrian Fortino out of Ann Arbor. I think the trick for us here at Mercury is that, if you're like your standard Silicon Valley blitz scaling type business, I don't know if we're going to be the first call that you make. But what I would say is that, if you're a company, if you're a startup that's looking for like deep expertise when it comes to working with, channel-based sales strategies, if you're a startup that's looking for, that kind of values a capital efficient type of approach, if you're a startup that wants to take advantage of our playbooks when it comes to building capital efficiently and going slow to grow fast, something that my partner Heath Butler runs an entire podcast around, then man, we want to talk to you and we want to work with you. So I don't really think about the geographic restrictions. I'm thinking more in terms of capital intensity and the assistance that we give entrepreneurs. And frankly, I think that's something that's really well suited for folks who come from non-traditional geographies.
Amazing. Well, this has been a huge pleasure, Aziz, being able to chat with you like this. It's been a long time coming, and it's so exciting to hear your level of optimism about the future and what you're seeing out there. And it represents, I think what in general what the venture capital industry sees out there. And oftentimes I wish that the general population heard more about this. So thanks for coming on the show. Aziz Gilani, thank you so much for joining us.
Thanks for listening to the Driving Alpha podcast, where we host top investors to demonstrate how they outperform the market. Click subscribe so you don't miss future episodes. Driving Alpha is supported by Affinity, provider of the CRM for the private capital relationship economy. Affinity knows who has the best relationship with the right startup. Affinity knows. Learn more at affinity.co/driving alpha.